I'm Charlotte McLeod with the Investing News Network, and here today with me is Mark Yaxley, Managing Director at SWP. Thank you so much for being here in person with me at BRIC. Great to see you.
It's my pleasure. Thank you for having me.
Of course. So it's our first time speaking, so we're going to go a little bit basic on our questions. So SWP, it's a precious metals dealer and a provider of vaulting services. I thought we could start off with demand. So demand for physical gold, how strong has it been in 2022 so far, and who do you see buying?
That's a good question. Well, you know that we had record years in 2020 and 2021 for physical gold and silver buying. 2022 started off equally strong, January through March, and we've seen a slow decline now starting to form in April and through the early parts of May. So it is cooling off a little bit, but as to be expected after a 2.5-year run, that was really kind of one for the record books.
Yeah, of course. And, demand for physical gold, how is it comparing to demand for the other precious metals, which we shouldn't forget?
Gold remains the favorite amongst investors. With our clients, about 80% of the value of the metal that we sell is still gold, silver being second to that, and then the platinum group metals are kind of a distant third.
Okay, so I want to talk a little bit about building a portfolio of physical precious metals. Do you have specific percentages that you would recommend for somebody who's starting to do that? For example, X% gold, Y% silver.
So we don't make a recommendation, but we do offer guidelines to our clients, and that can fluctuate a little bit depending on the market conditions. So there isn't no perfect science that will apply for like a generation at a time, but the basic recommendation that we tend to make is about 60% gold, which is kind of the cornerstone of a precious metals portfolio, 30% silver, and then I always advocate for about 10% in the platinum group metals because they act differently from gold and silver. They have different drivers and market conditions, so it's important that people include those as well.
And of course, every person is different, so they might have other things they might want to do as well. I am wondering about products. So once you decide you are going to put money into physical precious metals, you have a lot of choices. So are there standard recommendations that you make for example, for somebody who's just starting out?
Okay, so there's a few basic rules that people should know about. I call them rules, guidelines again, that people should know about when they're buying physical metals. The first thing that they should be aware of is that gold, from a premium perspective, is much less expensive than silver. In terms of a percentage over the spot price, you will pay less premium for your gold products than you will for silver or for platinum group metals. So that's something that they need to be aware of. The second thing is the larger the product in terms of the format. So a 1-ounce coin being on the small side, a 100-ounce silver bar being on the larger side. The larger the format, the more you ramp up, the more premium you're gonna save. So another guideline to be aware of. So if, for example, you were like, I wanna buy 100 ounces of silver, you could buy 1-ounce silver ounce, you could buy one 100-ounce bar. If you bought that one 100-ounce bar, you'd end up saving about 3 or 4% on your premiums. And that means you can buy more silver. So it's actually best that you kind of follow these guidelines. In terms of products that we recommend, we tend to stick with the major mints and refiners, the Royal Canadian Mint, the US Mint, some of the big names like Pamp Swiss, for example, on the gold side. These products have the best resale value. So when it comes time to liquidate somewhere down the road, which you should always be thinking about, you're not going to hold on to these forever, although some people do. You want to have a product just like owning a car that will have a good resale value somewhere down the road. And so if you buy the cheapest product possible on the market just to save a few cents really or dollars up front, you might not get as much back at the end of the day as you would if you bought a premium brand product.
Okay, and one of my follow-up questions was going to be if you make different recommendations on products for people who are new versus people who have maybe amassed some amount of metal. It sounds like maybe it's just sticking to these principles you've laid out.
Yeah, I don't think necessarily that there's different guidelines with the products themselves, although what we do see is typically with any new investor, we say, look, if you're trying to get the most metal as possible in your portfolio, that should really be your goal. The more ounces of metal you own, the better position you are as a hedge against other things in your portfolio. So look at the 100-ounce silver bar, for example. Look at the largest gold bar that you can afford to buy. Get the most ounces possible. For people that have been investing for a long time and they're just kind of rounding out their portfolio, we're going to talk to them about getting some platinum, getting some palladium, maybe some rhodium. And they're going to say like, well, I don't have any coins in my portfolio because I've been doing everything you guys have recommended with the bars all the way along. I want 500 silver coins just in case I have to barter, worst case scenario. Okay, fine. It's a good time to do that once you already have everything else covered.
Okay, and we started to talk about premiums. I think that this may be something that surprises people when they go to buy for the first time. If you look up the spot price of a metal, that is not the price you're going to pay. So what is your advice for navigating premiums, other costs? How do you know what's reasonable?
That's a good question. What's a good deal? So the first thing people need to understand is what the premium is and like why is there a premium? So like you said, you have the spot price and then you have the total price that you pay when you go to a store or you buy online. The difference is called the premium. Basically, the whole supply chain in our industry makes a living out of the premium. From the mine that produces the gold is then shipped to a refinery, the refinery refines it, makes a margin, sends it to a wholesaler to retailer to consumer. Everyone makes a living in that 3%, 4%, 10% for some silver products. You definitely want to compare premiums when you're shopping. Like I said, don't just go for the cheapest product, but also you should stay away from those really expensive 1 ounce silver eagles, for example. There is a sweet spot somewhere in there, and you can only really find that by doing comparisons on your cost per ounce. So you're breaking down all these products in what is it costing me per ounce to buy? And again, if you follow those guidelines, looking at larger format bars or buying the most you possibly can to get a volume discount, that's where you're going to see some savings. Yeah.
Okay. And of course, we have to talk about storage as well, because I think people kind of have two choices. You can keep your metal yourself and it's easily accessible, but it's, that can be not necessarily the safest thing to do. You can store it somewhere else where it's safer, but then you don't have that immediate access. So how should people go about trying to balance that?
That's a very good question as well. So typically you have 3 options. You have home storage, you have safe deposit boxes in banks, and you have storage at a private facility like the one that we operate. Home storage is great for a certain amount of gold and silver, and I advocate having some at home. Or a worst case scenario, like your bug out bag that you are going to get out of Dodge with, you might want to have some gold and silver in there. But the likelihood of needing that for that reason is very, very low, right? Most people choose a safe deposit box at a bank, which is fine. A bank is generally a safe place. It's where we choose to put our money. But the problem with safe deposit boxes is they're not insured. So if something does go wrong, if the bank gets robbed or there's internal fraud from an employee, for example, or they just happen to drill the wrong box, which it sounds crazy, but it happens, and they empty it, they hand it over to the wrong person, all these things, if that does happen, you're not getting your gold and silver back because it's not insured. So instead of that option, one that is quite popular is private storage in a facility that is designed for gold and silver storage and it's fully insured. Also, generally those facilities will give you liquidity. So when it comes time to sell your metal, you can sell it within the facility itself. You don't have to go to the bank, retrieve it, go to another store and sell it. You don't have to pull it out of your sock drawer at home and go find a dealer to sell it to you. Within that facility, there's a marketplace that exists and people can buy and sell within that marketplace.
And I wonder, so right now with everything that's going on in the markets, it feels to me like one of the themes we're seeing is people want safety. Are you seeing any trend toward, people wanting to keep more of their metals close to them?
Well, here in Canada, especially, the most recent fear monger or act was the Emergency Act that was enacted by Trudeau's government. What we saw, and we specialize in offshore storage, is a lot of Canadians trying to get their metal offshore, trying to get their metal out of Canada because they were worried about our government's overreach, the possibility of confiscation. Even though personally I think that might be a little bit of a stretch, people were worried about it. So yes, you always have those people who are going to keep it as close as possible to home, which is a good thing. But again, remembering that you probably don't have home insurance that covers your gold and silver. So let's say you had more than $20,000 at home, you're starting to take risks. Teenage kids, for example. I was a troublemaker. I would have looked for my parents' kids at that point in time, but I'm just saying that a lot of things can happen. And so that's why from government to having teenagers, a lot of things can go wrong. So a lot of people are looking at actually moving into private storage facilities, and some of that is offshore.
Right. Okay, that's really interesting. I didn't know that I've heard about, in the US, people get worried about having their gold taken away from them. I had not heard about that concern in Canada. So for you, you don't necessarily think that would happen?
I think, again, it's always a question of likelihood. How likely is it that the Canadian government will step in, kick down doors, or go to banks and confiscate physical assets, which is private property under the law, from people? Personally, I don't think It's something that most people should worry about, but if you are worried about it, if you are losing sleep over it, there are solutions that exist for you, and they don't cost that much more than what they would cost you here in Canada. So yes, it is the first time as a Canadian I ever heard of people doing this as well, where they were really fearful of confiscation, but I can tell you our volume really peaked during that time that Trudeau enacted the Emergency Act.
Very interesting. Okay, thanks for going into that. It seems to me that usually experts will recommend staying away from, collectible coins. I wanted to touch on that briefly. I imagine it's because they probably cost more, difficult to sell. What are your thoughts there?
Yeah, I'm glad you asked, actually. So I don't want to knock collectibles. There is a place in portfolios for collectibles, but there are some general rules, again, a little bit like the same thing with hockey cards or any kind of collectible. There's kind of two categories of collectibles. You have the high-end stuff, the stuff that is extremely rare and is actually a collectible because there's so few of them in the world. Those always maintain a very good value. It's like having a Picasso painting. There are so few of them in the world that they will maintain value and go up in value over time. So those are the ones, if you are going to go into collectibles, you want to go into high-grade coins, rare coins, basically. And you need to consult with a professional because most people, if you just read one coin collector magazine, you're not going to have enough knowledge to really get into that market properly and make the right investments because, like you said, they're very expensive. So if you pick the wrong one, then you go to sell it, you're going to be very disappointed. The other segment, which is a larger segment, is more common collectible coins or more common rare coins. They're not really that rare. There's probably quite a few of them floating around. And sadly, I've seen a lot of people in the precious metal space be convinced by dealers to buy these coins. And what happens is they pay a pretty high premium over the spot price, and when they go to sell, they basically get the spot price or the value of the gold and silver at the time of sale, and they're disappointed and they don't recover their money. So educate yourselves, speak to a professional, and try to go for the high grade stuff.
Okay, and you mentioned selling, you're touching on selling before, for many people there does come a time when they might want to sell, although some people do just like to hold their metals. So what should people know about the selling process? And again, how to get the best value, make sure that, they're getting what their metal is worth.
Yeah. So a little bit of advice there when it comes time to sell is number one, don't feel locked into the dealer that you bought from. So a lot of people have a relationship, they purchase the metal from a specific dealer and they think naturally that person is going to give them a good deal when they are bidding on the metal, when they're selling the metal back to them. That's not always the case. Some dealers are structured so that they give good sale prices when they're selling to their clients, but they're not very competitive on the buyback prices. So you really want to look at the market, maybe look at the top 5 or 10 dealers out there and look for the best buyback prices and know that you can open a relationship and just sell metal to a dealer as well. Don't always accept the first bid that you're offered. I shouldn't say that because we're in the business, but if you can negotiate, it's a little bit like selling a used car or selling your home. If you ask for 0.5% more or 1% more, you're likely to get something. So don't be shy to ask. There's usually room to negotiate. I think those are kind of 2 good starting points for selling. Yeah.
Okay, so you've given us tons of information. I hope that people are able to use this and when they're dealing with their physical precious metals. I want to end with, just talking a little bit about gold itself. I don't know how closely you follow the price. Do you have anything you can tell us about, your outlook for gold?
Yeah, the $1 million question. Yes. What is gold going to do next?
Fun one.
So I've been selling gold for 16 years, and I can tell you I do not have a crystal ball or heightened sense of what the market is going to do. But I have studied history, and that's usually what I base my predictions on. Where are we in the cycle? My opinion is we are in the early stages of a market collapse, not for precious metals, but for the equity markets, for the stock markets. I think that we're going to go into a recession within the next 30 days to 6 months. We're going to see something pretty severe happen in the market. And generally what will happen with gold and silver is exactly what we're seeing right now is the price will go down initially with the equity markets, and then it will go up in a pretty dramatic fashion. In 2008, gold went down 17% over 5 weeks, which was a big pullback. Gold investors were obviously upset, just like they are today, as the stock market started to crash and then went up 140% over the next 3 years. Silver went up 400% during that 3-year period between 2008 and 2011. I think we're going to see something similar happen. I don't know how severe the market crash will be, obviously, but depending on how severe it is and how long it is, that will really drive the prices up again. So I'm optimistic. I think right now is a good time to buy the dip, especially on silver. And I'm not a huge silver advocate, but $21 silver US dollars seems pretty cheap to me.
And one last question. So are people realizing this? Are you seeing people who see the metals at these prices and they're recognizing this is a time to buy? Or are we kind of waiting for that flood of people when it starts to rise and they all come running back in?
Sadly, the general tendency with investors is they wait for the price to go up. They don't like falling on a sword, and so they'll wait for the rest of the market to show a little bit of support before they'll jump in. But you do have those brave investors, those who have been following the market a long time, who are buying the dip right now, and we're starting to see some support for gold and silver as a result.
Okay, well, thank you so much for coming to talk about all things physical precious metals. Great to have you.
Well, you're welcome. Thanks for having me.
Perfect. And once again, I'm Charlotte McLeod with the Investing News Network, and this is Mark Yaxley with SWP.